at this one. This is an example of a CGT, so you could practice the CGT. I want to view the screen. Okay, so it starts with this, which is the timeline of what happened. At the end of the previous year end, 28 February 11, we had a machine X. The cost was 250, the depreciation was accumulated 37.5, giving us 2.5 carrying amount at beginning of year. Then that machine X was used for 6 months. In that 6 months there was depreciation. The carrying amount dropped from 212.5 to 193.75, which is depreciation on that machine. And as at the 31st of August it was sold. And it was sold for 270. At that date, the carrying amount was 193,750. The tax base was 150. So for accounting, our profit was 76.25, which is included in our P&L, which must be reversed. For tax, the profit is 120 because they'd allowed us more deductions and the carrying amount was smaller. That tax profit, we need to split between how much is recoupment, which is back to cost, and how much is capital gain, which is above cost. So to get us back to cost, we go from 150 to 250, so we go back to by 100, isn't it, to get back to cost. And then we go from 250 to 270, the other 20 to get us to the selling price. So the 120 of tax profit, in inverted commas, is in fact a recoupment of 100, which is all the wear and tear that we've been given, plus a capital gain of 20. That capital gain of 20 is made up of 66.6% taxable, 13,320, and then the remaining piece exempt, 6,680. Okay, now the way that I show it, the way that I've taught it to you, accounting profit gets reversed. Yeah, that's not what tax or SARS is looking at, accounting profit. Accounting profit comes from the way that we've chosen to depreciate the asset. Accounting profit of 76,250 gets reversed. What gets taxed is a recoupment of 100 and the taxable piece of the CGT. Do you agree? So then the number is 3707, the net number. What you will see in UNISA solutions, and when you look at it, you're going to say, oh, my numbers are all wrong, is that they show it differently. Why? Because they're splitting that exempt and temporary piece. So what they're going to say is that the temporary accounting profit is up to cost, which is 56,250, because cost would only be 250, isn't it? Up to cost. So accounting profit, which is a temporary difference, is back to cost, 56,250. The rest of the accounting profit, the other 20, there's a piece which is exempt, which is 6,680. The other piece is accounting profit and tax profit. So it's accounting equals tax, isn't it? What they're saying is this 13,320, you've put it in accounting as profit, and for tax, it's also profit. You have to pay capital gains on it, isn't it? So they're saying that that piece is the same. So they will say accounting profit up to cost, 56,250, above cost, the exempt piece, the 33.4%, 6.68. And then they will put the recoupment in at 100, which is the same. But your net number, can you see, is the same. Yeah, it's just a different way of showing it. I've reversed the entire profit and then put in the bit that is capital gains. What they've done is they've only reversed the temporary difference of the profit up to cost and put in the recoupment, which is also back to cost. And then for the above cost piece, they've just put in the exempt piece. Okay. So you will see when you look at this example 15, this is the solution they have. When you look at any capital gains in any UNISA questions, that's the solution they have. It doesn't make sense to me. Well, it's a bit funny to me because in accounting we don't split the profit. And when you look at accounting profit, in fact, when you look at their solution, they say exempt difference, capital profit on sale of asset. Okay, you can understand it. That's the exempt piece of the CGT, isn't it? But then when you get to temporary differences, they've got profit on disposal, 250 minus 1. And we know that that's not the profit we show on disposal, hey, for accounting. So when you look at it, it kind of doesn't make sense. So what they've done actually is split the two accounting profits, put the 56 here and the 20 up there, but then they've only put 20 times the exempt portion up there, because the rest they've said is the same. But you can see it works out to the same answer, isn't it? It just scares me a bit sometimes that you do it like that and it isn't incorrect, but the examiner, because he's got this memo, will say, oh, you've got that CGT and it's a plus, and then here I've got a CGT which is an exempt and it's a minus, and it's the same thing. And if you could be sitting there on his shoulder, hey, saying, but it's the same thing, then he would understand that you've done the same thing, isn't it? But I'm just a bit scared. So I just wanted to show you that that's how they do it. All right, so next week then we'll pick up and continue with tax, and we're going to start looking then at deferred tax.